Everybody.
Good afternoon, everyone.
Yeah, so we got a lot of things to go. We don't have as many things to go over as really, but
Amazon.
Yeah, we're talking about Amazon here. We called it yesterday that they would miss on the things they missed on. We talked about the numbers that we thought they had to hit, and it turns out that they didn't hit those numbers, and we got the reaction that we anticipated. It looks like the chart is going to fill out. That's scary for not only the people who are long Amazon, but it's scary, quite frankly, for the whole market. Amazon is it's part of the FANG. It's a big deal. This matters here. So, you give me a sec. You have anything you want to say, Bob?
Oh, no, just load it up on StockTwits.
Yeah. But it sucks that we have to be bearish, man. But that's what this move called for. And so now we're up. We're live.
All right, and let's just go over the numbers. I mean,
we're just going to talk about the numbers.
Did you listen to any of the conference call?
No, it wasn't.
Yeah, the conference call was on my car, but it was a basic conference call. There's not a lot of fireworks in the Amazon conference calls. It's not like some other ones that we were talking about. But so let's go look straight at their slideshow before we go into this. For them to beat and for their stock to go up. Oh, this isn't the slideshow. Anyway, so for their stock to go up, we thought that they needed to have a positive cash flow, they needed to kill on cash flow, they needed to have a perfect U.S. sales, and they needed to have amazing Amazon Web Services growth. Their cash flow actually outperformed, I thought. They had a great cash flow number. They did not have perfect U.S. sales, and their AWS didn't grow at 50%. I think it dropped back down to 46%, which was less growth than last quarter. And as a result, the stock did not go up. It definitely didn't go up. It went up today 7% on the general market, which was nice.
Earnings anticipation was there.
It's right back to where it closed yesterday after the massive sell-off. It's right back at 1650. You can expect it to open somewhere between 1675 and 1600.
It could open lower with GDP in the morning.
Yep, and it really is now turning into a macro situation.
Yeah. Now it doesn't matter about these companies. Now we're talking about the stock market as a whole.
Yeah.
And so we got cash flows up. You want to go over cash flows? We got charts we can look at.
Let's look at the charts.
Yeah, let's look at the charts.
Yeah, let's look at the chart. Here, take it away.
So the first thing I want to go over here, man, and just very simply is let's hope not,
Yeah.
right? But it's looking like this is going to fill out. This trend line's going to hold through this earnings here. We're going to hit that bull trap, and then we're going to get the return to normal. Whatever the news is going to be here to get it back up to these levels. Yeah, at this point, I couldn't tell you what that is.
And you know what? Just looking forward on some basic, like, what might happen. It could be the election, right? November, what is that, November 4th? If the market likes the election for whatever reason, it has a nice little bump there, a nice little bull run, and then, November 14th, November 15th, just right then. That's definitely something that could happen. There's a number of things that could happen, obviously.
We could come to a deal with China.
We could, a Chinese deal,
a trade deal or something.
Yeah.
Something could happen. So, anyway, if this chart were to go through, whatever this return to normal is, until you're certain, I think that if you're a long-term investor, that's not the smartest time to pick up some bags. If you're a swing trader, that's what you're looking for. If you're looking to get out, that's a chance. But anyway, that's down the road. That's all assumption that we're right. So another chart that we're going to look at is what's going on post earnings for Tesla here, or for Amazon. So all day we were looking at bullish trends. We had a massive sell-off yesterday.
I was a little worried about our prediction, actually.
Yeah, so was I. I was sweating, man.
But a few stocks I've noticed have run up pre-earnings and then immediately crashed that day. This seems to be a trend. It seems to be a trend in the tech sector. So.
Yeah, it does.
Yeah.
Actually, it's good that you said that.
Yeah.
But, you got the initial sell-off right as earnings came out. It tried to stabilize. We go, and it just goes further. We go. So you got to realize less people have access to trading right now. And when this opens with bad GDP, really, there might not be too much of a floor.
If the GDP numbers are bad tomorrow morning, it's going to be a market-wide.
We're talking about possibly a 1,500.
And this is what we were talking about before. This is definitely going to be more in the later show that we're going to do around 9, 10 o'clock.
Yeah.
But this is people's 401ks and IRAs and the whole 9 yards.
We're talking about a little crash here. Maybe not even a little crash. We're talking about a full-blown market crash if GDP doesn't come through. These companies, the way that they're reporting, the momentum of the market right now, it's looking like it might get its legs taken out from under it.
Not a lot of positive things.
No, it's not.
Let's pull up that Agilent chart. I think that is a good comparison between the two.
Yeah, so what I was looking at all day today, right? Not all day, but for a good part of the day, was this chart right here. So Allergen, Align, or whatever it's called, Technologies.
Those are the candle.
They're the candle, yeah. Amazon is the white line. So, as you can see, there's some differences. They keep going in and out of one another throughout the course of the year. Amazon seemed to have flipped them. And what Allergen did was they beat yesterday they reported, and they beat on their earnings and their revenue. They beat top and bottom. They beat top and bottom. They lowered their guidance. They said they weren't going to have a good Q4, and their stock was down at one point today 25 points. Okay, but Tesla was up 7 points today. Okay, and the only difference in between this stock and that stock was 1 day of an earnings call. So are we looking at a 20% down day on Tesla or on Amazon tomorrow? And really, another thing I just want to point out with these charts is they had the same setup going into it. They had the same setup, and they have pretty much the same thing, except Amazon missed on revenue too. So it's Amazon might get bumped up because of how big it is. But this is the things that we're looking at. This is a very macro level that we're talking about. That you see other companies with similar, the market cap's different for it or whatever, but the charts were similar. You can expect the same things because this is an algorithm-driven market. So these are the things we're looking at here. These are the things that we're talking about. It's not good that it went down. The prediction was correct, but we're 2 for 2 on these earnings. And I'm kind of happy about that.
All right, so let's get. I'm happy that we were correct.
Yeah.
But I hate bears, right? And the thing about
nasty creatures.
And the thing that really sucks about bears is when they rub it in. So we're not trying to rub it in. A lot of people had a tough day today, and a lot of people are going to have a tough day tomorrow. And we feel for you, you know what I mean? Amazon's a winner.
It sucks.
And it sucks. And so, let me pull up the slides here so that we can go over some of the actual numbers that they reported. And so, again, we thought cash flow was king. They needed perfect U.S. sales. I called for up 50% in U.S. sales. That's what they needed for the stock to go up. And they needed amazing AWS growth, better than last quarter. Again, 50% would have been nice. Last quarter they were at 49%. Let's look at the numbers here. So the first thing was cash flow. Amazon cares a lot about cash flow. They crushed their cash flow. I mean, let's just be real here. I mean, that's the tremendous number, best cash flow quarter that they've had. Hit it out of the park.
Yeah, they did. They killed it.
They
killed it in terms of that.
Yeah.
Absolutely.
Here's some more cash flows. This one was negative. We said that it would be a non-factor because you knew that they were going to fix it, and sure enough, they fixed it. There's nothing going on there. Shares, net sales. You go back to here. We said international would go down, and it needed to be picked up by U.S. sales. This went down 2%, and this went up 1%. You would like to see a little bit better there, and AWS went up 1% as well. International definitely was a weak spot here. Operating income shot up, and we will see that AWS actually had a better operating income this quarter than last quarter, but the growth wasn't there, which is what the real problem is.
Yeah, so I think that
here's the North American sales. I called for yesterday a target of 38. I thought they needed 38 here for them to be successful. They came in at 34. More efficient on the operating income on the U.S. side, though. This was 1.8 yesterday, and it went up to 2. So what is that? It's a 10% gain, essentially, in the operating income, which is a good number. But the sales just didn't overperform, and you needed the sales to overperform for it to go up. International, I mean, they lost less this year on international, but the sales didn't grow. It's not a growth thing. This is, and I was thinking about this today too. If Amazon didn't have the AWS, if it was just U.S. sales, international sales, retail, without this business investment side of it, this stock would not be a growth stock. It would be your average retail stock, and it would be going down tremendously. The AWS is keeping it afloat. 46% up. I thought that number needed to be 50. So again, but not good numbers. I mean, it wasn't good numbers for growth, and the share price after hours reflected that.
Yeah, and it's exactly what was in line. You can see it in the numbers that they had to come out. They had to come out and beat all those numbers, and it just wasn't going to happen. So it was an easy call to make. It wasn't an easy call to make in terms of like just coming up with that. Dude, betting against Amazon is a big bet.
Yeah.
If you lost betting for Amazon, it's not the worst loss you could have taken.
Yeah, we should actually throw the disclaimer up here so I can tell you my situation.
Go for it.
Right, let's just throw up the disclaimer here. Straight off the bat, does the microphone work through this?
Yeah.
So, don't listen to us, right? Don't invest on
Absolutely
us. Yeah,
not.
this is don't listen. That's what that says.
With that said,
2
for 2.
Yeah, 2 for 2. 2 for 2. So, I looked at puts on Amazon. I cleared out all my cash positions. I thought that I didn't clear it all out. I stayed in a few mortgage-backed security indexes and things like that. But as far as the S&P, I emptied out of that, and I was looking at buying puts in Amazon, and it was just too rich for me. I think you were looking at something like $2,000 for a 1600 that was expiring relatively soon. It was just too much. You know, it was just too much for me to put online for it in this market. So I didn't make or lose money on this.
Yeah.
But
I don't know. So that's your situation. But
that's my situation. Don't listen to me.
Yeah. I felt like you had a lot of opportunities with this earnings. I felt like it was an easy way to hedge if it went wrong. Things were cheap today. Things on the negative side were cheap today. And I felt like if you really had trust that chart was going to fill out, I felt like you could have gotten a lot of bargains across the board.
I was thinking about doing some like call spreads on top.
Long-term shit.
I ain't doing any of it.
There was an easy way to make it. If you were thinking like this anyway, if you were thinking like this, it's easy to talk about how smart you were to think like this, and how you were ahead of the curve here, right? But just
it's hard to be happy about being right here.
Yeah,
because
it's tough. We were fucking right here. If we were right, then what were you looking at? Some of it's just it's not my problem, but I don't want to say it like that. But
and you know what?
It was easy. This wasn't the hardest call to make in the world, in my opinion.
The thing that is real concerning is that this earnings report can lead to this, right? That it keeps us online here, that the catalyst wasn't met, and it could go right down to this trend line here, and from there you got to really be aware. You got to really have your ducks in a row, and like we were saying before, this is really going to affect the market on a whole. I think that a lot of macro things are going to come into play, and it hasn't been a good earnings quarter.
It's been mixed. The banks beat.
But they went down. I mean, I've been long the banks
the whole time. I wanted to see what was going on with tech, and I knew the semiconductor was going to miss. I knew the semi was going to miss just because they had talked about how they were going to flood the market, or the market was already flooded. But
and there's a huge drop in demand for the semiconductors. Let's be honest, the semiconductors. When Bitcoin crashed, a lot of these companies stopped making these mining equipment. I know for a fact I was supplying a few of them, and they stopped ordering those parts, and NVIDIA and AMD and all those. They had a huge bump with those Bitcoin mining machines, and that market fell out, and now they have excess inventory.
They're sitting on their hands waiting for the next
bad market.
Yeah, so that's what happened. We're looking at bubble charts. And I almost made one today for the Dow and the S&P, but I just figured, this isn't the time to rub it in people's face. We all know it was a bubble.
Yeah.
It looks like it's falling apart. We have catalysts in the world coming up here. We have America's GDP tomorrow. We have the U.S. elections coming up, which is very, very important. This isn't a politics show. We're going to have to talk about that.
It's impossible to ignore.
Yeah, it's impossible to ignore. There are so many macro situations going on that it makes sense that we could be walking into a bubble chart. If a few things go wrong here, then that's what we're looking at.
And just going right back to Amazon real quick, I mean, the numbers say it all, really. This one right here is the most important. Last quarter, 49% up. This quarter, growth slowed. And at the end of the day, this is what's driving this company. This is what put this company on the pedestal that it's on. and it looks like, you know, it's not positive. It's not. It wasn't a positive earnings in terms of future growth. And I think actually they revised their forecast down.
Yeah.
So.
Yeah, they predicted that their holiday forecast was going to be lower.
Which is a problem.
Which is a big problem. It means that their monopoly of that sector of their business is going to shrink a little bit.
Yeah.
More people are going to buy mom and pop stores.
And, you know, let's be honest here, AWS might have fueled the growth, but if they start losing retailers, if that goes down, then they're losing their core.
The legs are going to come
Yeah,
out.
and if they lose their core,
then we're looking at the bubble chart.
yeah, you're looking at the bubble chart. You know, it's funny, Amazon, you can look at it as two different companies. You can look at it as a retail store, and you can look at it as a web service store. I mean, I think that's the most accurate way to do it. You know, their web services makes $23 billion. That's no joke.
Yeah.
You know, I mean, that's a company in itself. So there's two companies here, and neither of them overperformed, and the stock showed it.
Yeah, and that's the story. That's the story of the day.
That's the story of the day.
Yesterday we called Tesla. Today we called
Amazon.
And if you watch 10 minutes of this, you know that we don't think that GDP is going to be anything good tomorrow.
I
don't think the market expects it either, which is even scarier.
Yeah.
And that's not a price in thing. We'll see what those actual numbers are.
I think
it's like housing.
just like Amazon, I think business investment is going to be a huge key here. Businesses are the first people to really feel these tariffs. I don't think that the prices have been fully passed on to the consumer yet. They will be. And business investment is going to be a huge indicator.
Consumer discretionary is going to go down.
Yeah. Well, that's a tailing thing.
Yeah, it's tailing. That's detail.
Yeah, because I don't think there's been any layoffs. I don't think that there's been any.
Someone announced layoffs in their earnings report.
Really?
Yeah.
I mean, someone might,
but 2 days ago or something.
Definitely not mainstream yet.
Not mainstream.
Yeah.
It was a pretty decent amount of their business. I think it was like 10%. But yeah, so.
So 9 o'clock tonight, we are going to be doing a show that's kind of the market-wide thing, since there's no earnings after Friday.
Tomorrow.
Yeah, and really, if you guys want to
like and
subscribe, of course.
Yeah.
Next week, we need ideas of what companies to look at.
What companies you want us to look at, what companies you want us to analyze before earnings. Any company that reports will do.
Throw it up in the chat.
That's not $5.
Yeah, throw it up. Yeah, not $5. Yeah, you know what I mean, real. I'm not going to be looking at like your
penny stock
or ISO, that dog. Yeah.
ISO is blood.
Yeah, ISO. They killed the Chilean horse. If you guys,
was it Peruvian?
I think it was a Chilean horse. If you guys want like a comedy show, you should look at like the history from like 2013 to 2016 of this company called ISO, and that was fun time.
It almost worked.
It almost worked. I guess I'll just say that they were a company that was pushing like 20-year-old technology as like a new cancer treatment, and they were trying to do horse tests in Chile, and the stock, and it crashed because they killed some Chilean horse or something like that. Yeah,
should happen.
So,
it's tough for the horse. But anyway, that's the Amazon post-earnings thread. We aren't trying to rub it in or anything like that. But it sucks if you lost money today. I would recommend waiting for the return to normal to try to pull out. There will be some sort of recovery here. We aren't just going to drop, in my opinion.
I agree.
But don't panic. But just it's tough.
Yeah, and be ready.
Yeah,
be ready. Be vigilant. This is the time where you can't get away with just buying stocks and checking up every 3 months.
Yeah.
You really have to pay attention to it day in, day out. And if you do that, you'll be fine. Yeah, you'll actually. Volatility equals profits.
Yeah, as long as you run on the right side.
Yeah, you can make a lot of money in volatility. I think you can make more in volatility than you can in just steady growth.
I completely agree. Sometimes things are cheap when they should be expensive, and vice versa.
Yeah.
So that's the show. Thank you for watching. Please like, subscribe, give us comments on what stocks you want us to go after next week. We'll go after them. We'll give you analysis. And
good night.
Yeah, 2-2, baby.
Yeah, see you tonight at 9 or tomorrow or sometime in the future.
Whenever the hell you watch next.
Yep.
See you. Have a good night.
Good night.
That's pretty good. Yeah, that was good. It was a little long.
It was a little
long.
Yeah.
It could have ended.
And then we talked about like markets.
That's alright.
Yeah, that's alright.
So what do we think about this GDP?
I have to look at it. I haven't even looked at it.
We don't have 2 people watching.
Yeah, it's the whole time, or just 2 people watching
the whole
that?
time. So when I pull it up on stocks, it's just 2 people watching.
Yeah.
So we'll just throw that up tonight or some shit.
Hey, 2 people watch the whole video.
Yeah, sure. Stupid hours.
Good time.
How long was it?
It was like 19 minutes. There's a recording thing right here. You can look at. Yeah, so, yeah.
Stop streaming.
Stop streaming.